Didi Chuxing, China's largest ride-hailing company, is reportedly in a deal to buy its great rival Uber China's local operations. With me to discuss the deal is Lucy Colback, Lex's writer on Asia. Lucy, what does this deal consist of?
As far as we're aware, and the deal is due to be announced sometime this week, Didi Chuxing is buying Uber China business, as you mentioned. Uber's China business was last valued at around $7 billion in a capital raising. Didi's business valued around over $25 billion. Didi will take all of Uber China's business, and Uber China's investors will receive 20% in the merged entity. And Didi Chuxing will also put $1 billion into Uber's global operations for an undisclosed stake.
So nothing's yet been announced, but do you get the sense that Uber is chucking in the towel in China, and if so, why?
Well, to be honest, I get the sense that both of them are slightly chucking in the towel. It's been an incredibly cutthroat business, and they've had to subsidise rides to the extent of about 3 times of a normal ride fare in order to win market share.
So they're actually paying people to get in the taxis.
They're paying people to get in the taxis. They're paying drivers. There's been a big fight for drivers and obviously riders as well. Didi says it has an 80% market share. Uber says it has a third of the market. Somebody's exaggerating a little bit there, I think.
And this is with the idea to getting as large a share of the market as possible.
Well, that, and also stopping the cash burn. Uber China lost $1 billion last year, and Didi Chuxing said it had put aside $4 billion for what it calls market fostering, i.e. subsidies and so on. So they're both bleeding. They've both raised about $25 billion of capital, and that includes Uber's global business. But Didi itself has raised about $10 billion to pour into the China market. It's just a question of stopping the pain, really, and I think it's stopping the pain for both. It's a bit of an admission that they can't continue in this way, and the investors are not happy with that.
Would you think then, after this deal with Uber China essentially out the way, Didi will actually become profitable, or the market itself will start to become profitable?
It has that possibility, but I'm not entirely sure that it will last, because although they own the market now and they will be able to raise prices, the question then becomes, will riders continue to ride at the same volumes? Again, if it's profitable, I guess it doesn't matter too much, but the question is where that balance kind of strikes. How many riders do you lose? How much profit can you make from the rides? And whether or not, if you make too much profit, somebody else comes in, because they're not the only players. There are a few others. They're much smaller and they're much more sort of concentrated in different, in specific areas. But there's the possibility that they can then start competing more strongly in the market as well. A loss of one player just means that there's potentially space for someone else to come in.
Thank you very much.